Hi everyone, I'm your host Subhasis Sahoo, Head of Marketing at FinFloh. Welcome to the second episode of our podcast series AI in Finance. In this series, we'll be diving deep into the world of AI and its transformative impact on finance teams, whether it's optimizing accounts receivable, making smarter credit decisions, or streamlining cash flow processes. We are here to break down how AI can empower finance teams and reshape the way the office of the CFO functions. In this episode of our podcast, we are joined by Mohit Sharma, a senior leader in global strategy and consulting function at Accenture right now, specializing in CFO and enterprise value. Together, we are going to explore how AI is reshaping the invoice to cash process. Welcome to the podcast, Mohit. How have you been?
Thank you, Subhasis. I'm doing very well. How are you?
I'm doing great. I'm having a great day.
Good to hear that.
Okay, so we'll get started. But before we actually dive into the topic of today's discussion, I would love the audience to know a little bit more about you, Mohit. Like right from starting as a process developer at Converges to taking on leadership roles at various organizations like Accenture, IBM, Capgemini, HighRadius, and so many more, right? It's been 22 long years. Like how has the journey unfolded and what key moments would you say have defined your career so far?
So you have taken me back to nostalgia. I mean, those were the days when especially the outsourcing industry was actually starting.
Correct.
So the initial shared services days, I was part of that lot only.
Okay. Oh, that's nice to hear.
Yeah. So we have seen those LAN cable based network connections, green font and black screen kind of systems we have worked upon.
Okay.
So those were the days when it all started. So I started in the CRM domain, pretty much that was the trend in those days.
Mm-hmm.
Moved into finance quite early.
Okay.
Then I moved into re-engineering and consulting also. So this was the time when I joined Genpact. It used to be called GE Capital International Services.
It was back in the year?
This was 2002, 2003.
Okay.
So practically, if somebody was born at that time, this person would be...
Yeah, like I was born in 1990.
Already in workforce. So this was in 2002, 2003. So started into CRM, moved into finance, then moved into re-engineering, complete consulting, especially finance transformation consulting, did Lean Six Sigma kind of stuff, then moved into technology side of the scheme of things because cloud was emerging and technology started getting more and more agile. This was in 2008, 2009.
Okay.
That's when I moved to Bangalore from NCR. And in that time, there was a lot happening on tech. People were experimenting a lot. Despite the fact with AI and all that, you don't see that kind of experimentation happening because cloud was very new, analytics was new. People were just trying it out with different things into finance and accounting. Did a lot of stuff with IBM in those days, built a couple of products myself, which were into accounts payable workflow, and deployed them, sold them to the entire world. Today, if we have to find out, let's say, around 80 or 90 customers, that looks like a Herculean task. I sold it off to more than 80 customers in a span of 2 years. So that was like a golden phase. I still have very fond memories of that time.
Was it because it was very early that this sort of a technology had come in and
I'll give you a very classic example. In those days, even basics had a kind of a sense of wonder. So like OCR is happening.
Right.
So what is the match rate? Somebody was there monitoring the match rate.
Yeah.
Now, if your OCR is not able to read it, it is considered as table stakes. So that was a kind of a transient phase. We went through that. Then I moved into Capgemini in a couple of roles, primarily process improvement, continuous improvement kind, because I was a black belt by that time. Then life moved on and I entered Accenture in a role which was very different, sales enablement for finance and accounting. But again, I have always been close to the domain, procure to pay, record to report, order to cash. I started up as a procure to pay domain expert, converted into record to report in the way, and then order to cash also joined along because you realize, okay, order to cash is just a mirror image of procure to pay. So that's the way it works out. So it has been a long journey. I have done a lot of stuff, including some AI-based tools which predict the fraud for any transaction or any email that is coming, which is a vendor fraud prevention tool, which got patented as well. I run a newsletter as well. It is called Beyond Human. I have spoken at some of the niche forums, have been interviewed in some of the chartered management accountancy journal as well. So there have been quite good learnings, quite sweet moments of it. So here we are.
Okay. That's really lovely to hear. But Mohit, along this long journey, right, can you pinpoint some of the challenges that you have faced? Like if you would just want to term them as your top 3 challenges that you have faced and how did you come to a solution for them?
See, there have been many. I mean, we still face them and kind of AI wave that we are into. I think you are experiencing these challenges a lot more. Try to see it like this. It has been always difficult to convince somebody to invest into technology.
Okay. Yeah.
Okay. It is not an easy conversation. The reason is not that people are not interested or they do not have a business need, but articulating that business need by means of a story is a very difficult task.
I agree.
So I was very good with storytelling. I was very good with presentations, but despite that, it took me a long while in order to develop it as a kind of a niche skill where I can be confident enough. How can I simplify a complicated technology component to a simplified business model and give it to somebody? And a very kind of an interesting segue is there that I did my ACMA CGMA credential from SEMA UK at the age of 42.
Oh, okay.
Okay. Before that, at the age of around 35, I did my TOGAF L2 Foundation, which is a completely technology-driven kind of a qualification, a credential. So that's where I realized that till the time somebody doesn't understand both the tech side as well as the business side or the process side in complete detail, it is very difficult to position a best of breed technology in front of anybody.
Absolutely.
Because even if they buy it, they might not be understanding it fully. So that is challenge number one.
Okay.
That it has existed. Today, the same issue is there with AI. You have millions and millions of dollars being pumped into AI startups, but what is the output? People have a kind of this despondency, this kind of anxiety around AI, whether it will work or it will not work. It's just a tool. It will work. But you should know where you're putting the tool. Yeah. It's not just writing for poems for you. It can deliver much more business impact.
Yeah.
And I'm pretty much sure we'll touch upon those topics as well during our conversation. Right. So it's a tool. End of the day, it will work, but you should know what you are buying and where you are putting it on.
Yeah, it shouldn't be like just buying AI for the sake of it and not knowing how exactly to use it.
Business, do not take these kind of emotional decisions. Take business-centric decisions.
It's not about buying the buzz, right? It's about buying the value.
It's not about buying the buzz. There are 6 categories of AIs, and I'll touch upon that later as well. You need to know which one is the fit for your use case, and then you need to decide about it. So that was always the number one challenge, because when I was working with a lot of shared services and outsourcing kind of an environment, technology was a kind of a mandatory fix. It was a must-have, because you cannot process invoices sitting in an India or a Philippines or a China. Correct. When the actual invoices, physical invoices, are arriving in United States, or somewhere in Japan.
Right.
So you can't do it remotely without the help of technology. So technology was an essential segue, and it was always difficult to convince people to help them understand. And I'm very respectfully saying it, like, people who were resistant, they had all the good intentions, but it was not made presentable to them, or they were not enrolled into the conversation to such an extent that they can make a decision quickly. So that was number one. Number two, you can say number one is definitely a change management aspect of it.
Yeah.
Number two, I would say governance and business model. It has always been a pain. We buy the best of breed product, and we do not know the governance process to be set around it. We do not know the business model that we are putting it for.
Okay.
So again, rationality into the decision making is only complete when you are discussing about these things and completely understanding it, what additional responsibility it is entailing on us. So if I'm buying a new tool and the responsibility and ownership around the data set inside the tool is with one single person, how much bandwidth that single person has in order to take on the additional responsibility. So those kind of things do get left out.
Overlooked, right? And then it creates a huge problem.
And third challenge, I would say it is a kind of a phenomena, not a challenge, but I have seen it across. For a initial phase of my career, even I was equally trapped in it, as I've seen others trapped in it. We do not make it a point to invest a couple of hours every single day in learning and our health. Just like health, we also do not invest into learning. We are not expanding the horizons. We are not investing into learning something new. If I have to ask you, what was the new thing that you learned today or yesterday or this week? It will make you think. That means there wasn't a conscious effort or investment. So we are just emptying the wells. We are just taking the bucket out, putting it into the well, emptying the wells. That is the kind of labor we are doing, but we do not know where the water is going.
Yeah, that's true.
Okay. So it's very important to understand, like, what was the new thing that you learned today? Like I made it a habit. This has been like for 15 years now. I'm spending a lot of time. There has to be a list that I can talk with my kids next day on a coffee session. I can speak about it. That
LinkedIn works well, right? And that resonates completely as what you're saying.
I still do it very minimal, trust me. In my newsletter, I wanted to do it every single day. I'm not able to do it every single day. But like this morning, I realized, okay, there are so many expert tools, generative AI tools, which are dedicated to research.
Okay.
There is a tool called Litmaps. There are multiple such tools. I just discovered them today. So it was like, oh, wow. I mean, you are not dependent on ChatGPT, or you're not dependent on Perplexity. There is bigger fishes in the pond. And those are dedicated expert tools. Like it's literally asking you questions like this. Are you doing PhD? So you are into full-time research role.
Got it.
That is going to summarize. It is going to help you build your thesis.
Additional GPT tools. The problem is you have to train the AI first in order to get the best answers.
No, I believe for certain use cases, it is too much of effort.
Yeah. Okay.
It's too much of effort for. So there are tools like Elicit. There are tools like Litmaps, which are exclusively for research purposes. That was like a revelation. I was thinking about it. There should be something in the world like that. Okay. Could not discover it. But how do you discover it? With Google and with ChatGPT, still you have that access to information. But how many times you have given ChatGPT a prompt that this is a subject I want to learn on? Give me 20 best free learning resources. So this is my third challenge that I have always seen, that people get wowed and enamored by somebody who has a skill, articulation, XYZ, different things. My only simple question to them: when was the last time you spent dedicated 6 hours on acquiring expertise on this particular area?
Got it. Yeah.
So 3 things, very different.
Yeah. Definitely. I think the last point, it's just about being curious to ask the right questions at the right forum.
So my 3 lessons are: know the tech before you put money on it. Spend some time. And number 2, governance is very important. You can't ignore it. Okay. And third thing is continuous learning. Be curious. There is a lot available. We are lucky to be born in a time and age where the access to resources is not a barrier we have.
That's right.
We can access whatever we want. Everybody is carrying those machines where they can access it. So it's information is in abundance.
Okay.
Convert that into cash.
Right. Okay, that's great to hear, Mohit. I think now we'll get into the meat of the topic today. And the first question about it is going to be, like, I'll just bring it with a statement that AI is really transforming various functions within finance. How have you seen AI impacting finance operations at a broader level?
I'll give a very realistic take on it because I have seen this very closely. Okay. Cloud arrived in the world, people were unprepared.
Correct.
So the cloud bus was running, people were running behind.
Right.
Similarly, RPA bots, people were still struggling to grapple with it, and they had like a 5-year strategy in 2022. We will put some RPA bots in place. We'll do automation stuff. We'll save some money. We'll have efficiencies. We'll have good drive around it. We'll promote it as well. And AI arrived. Okay.
Everyone is chasing it now.
See, there are 2 kinds of chases right now. One is the AI startups are chasing customers.
Right.
And customers are trying to chase AI.
Right.
But again, try to look at my previous response, the 3 things I said.
Right.
Aren't they related to how the role of AI in finance and accounting? If I ask somebody, okay, where all you can apply AI in finance and accounting, there is phenomenal potential. It has existed even before. In the November of 2022, OpenAI decided to make that announcement that we are putting 100 million users and whatsoever and whatnot was there, like ChatGPT came in our lives. And every single person has been using these words, AI, ChatGPT, generative AI, every single day since then. At least if you're living in cities and you make use of any electronic device, then this comes over to you naturally.
That's true.
But try to see it like this: procure to pay, order to cash, record to report, 3 core domains. Then you have FP&A, taxation, and then you have your costing, profitability, and all those kind of component parts, reporting and all that. There is a phenomenal work AI can do into the finance and accounting as a segment. When you look at this entire bucket, so like I'll start with your company. I'm impressed with decision intelligence, what it does, right? Basically predicting which particular customer will pay late, and basis that you are trying to get a kind of a risk score associated with it, and then trying to put it up in a perspective that, okay, what should be the dynamic pricing? That's very interesting. Statistically, because I have invested my time a lot, I know that there is a kind of a sophisticated algorithm. There is a kind of a step-by-step process. You cannot go wrong on one step.
Correct. Yeah.
It is that clear to me. But sufficiently mature technology looks like magic to anybody who doesn't know.
Yeah.
That's one. There are other examples I'll give you. So there is a lot that happens onto the record to report side, where a journal entry creation, especially even with regular journals, this is a very manual effort. You might have a 300 line item journal, which you have to do regularly before you're closing. Those kind of responsibilities AI can take. Okay. Leave aside areas like customer service, AP help desk, and those kind of things. One big challenge. As I said, the world was still struggling to grapple with cloud analytics and automation, and AI arrived unannounced. So even for those people, they were into a journey where they were still receiving paper documents a lot, which were written in multiple handwritings, multiple languages and all that. In 2019, Microsoft did something very interesting. They announced in their Inspire conference, they announced cognitive APIs.
Okay.
So this was a very big disruption from an AI standpoint. So they were using machine learning algorithms to, let's say, read 300 different types of handwritings. And accurately capture it with a 98% rate. Offer it at a price point like maybe at $20, $25 for, let's say, 500 pages. That was crazy. It was a highly disruptive price point coming from Microsoft. Okay. So those kind of things, they have a very big use case in AP because you receive a lot of paper invoices, especially if you look at United States. They run a paper factory inside very big corporations. There are millions of invoices, millions of notices, millions of statements, a lot of dunning stuff. They receive a lot. Okay.
I think accurately, also go with the cash application, right? When you receive reconciliation statements, right? And then
today, if you look at a standard cash application model, the money arrives in your bank. If there is a a payment reference or indication of a particular invoice for what it has come over into any comments or any reference field, unique identifier, you can automatically match it. That is automation.
Yeah.
But let's say there is nothing mentioned in there.
Which is
Basis the metadata.
Yeah.
Basis the metadata, AI can determine which is the best fit match for this particular invoice, keeping human in the loop. That I believe this is what it is. So instead of you finding it, I have gotten it for you. Can you please confirm if this is the right one?
Correct. The operations is good. It's just the decision that has to be taken.
Understand what you are buying and where you will deploy it.
Okay.
These are important matters. So generative AI cannot be applied in cash applications. You are doing a classification algorithm, which is basically picking stuff up and then trying to identify the relevant open invoice and do a matching.
Yeah.
Very classic example. You need to produce a lot of summary, lot of commentary when you are producing your financial reports.
That's right. Yeah.
Generative AI can take care of that.
And I think another use case could be having a chatbot where you ask relevant questions and it goes through the entire platform and gives you the answer rather than you.
So this is a very interesting one because you know the importance of it, because these financial controllers, they do not have the time to plan or specify their requirements as well.
Absolutely.
So if something is available on their desk, which is like, okay, I want to understand the reasoning behind this number, blah, 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 it should be able to respond back.
Yeah.
So this is,
that saves a lot.
If you look at it, it saves a lot.
Yes.
Look at it from an auditor standpoint, right? Give me the entire audit trail for this particular invoice number. So it is a very, very powerful layer. Finance and accounting was dealing with numbers for a very long time. This is the first time something which has come, which can be contextually trained with the retrieve augment generation, with knowledge graphs. You can at least put some logic into it where it can speak accountant's language with an accountant.
I think that was a brilliant answer, Mohit. I think we'll just get into the details of the process that we deal in, which is invoice-to-cash, right? I think you would agree that invoice-to-cash as a process in itself is very complex, and it has dealt with a lot of operational inefficiencies throughout its life cycle. Right? From your perspective, what do you think are the major challenges that AI can actually solve?
I'll just give you some stats and numbers. Try to see it like this. And this is not my numbers. This number belongs to the owners of the documents who published these public reports. Correct. So CFO.com and Hackett usually do an annual exercise of working capital scorecard.
Okay.
Okay. $31 billion was the locked opportunity in accounts receivable for top 1,000 companies of United States alone.
That's huge. Yeah.
Okay.
Okay.
Bear with me now.
Okay.
If I plot the total revenue of Fortune 500 companies on a chart,
okay,
literally one by one, take Walmart, take Amazon, take Apple, take everybody, plot it on a chart. Their total revenue somewhere comes around $18 trillion.
Okay.
Total revenue just for Fortune 500 companies.
Got it.
So if there are 394 million companies across the world, and these are the top 500,
okay,
their revenue is $18 trillion. Now try to see from an order to cash standpoint. If 60 to 70% of them are B2B,
right,
40 to 60% of their payments are coming late,
right,
do the maths.
Okay,
that's the opportunity. That's a whatsoever it is trillion or whatsoever, 900 billion or whatsoever it is. It's a huge number. And you are not even talking about those, I would say, those residual companies which are not counted in this list, who do not have the bandwidth or who do not have the resources in order to secure timely payment from the customer. So one of the big challenges with invoice-to-cash or order-to-cash as it is called, and the only difference is that whether your journey is starting at the order entry stage or journey is starting at the invoicing stage for the customer. Okay. The revenue gets accrued, the asset gets created once you have raised an invoice. So invoice-to-cash becomes a very different game. So you have credit management, you have order management, order fulfillment, you have order management, order entry, whatsoever you may want to call it. You have invoicing, you're billing and invoicing. You have collections, you have customer disputes and deductions, you have cash applications, and you have reporting. This is your entire order to cash cycle. Most interesting part is these are discrete activities by themselves.
Yeah, I would agree.
Okay. There is the biggest challenge in any order to cash cycle is a single version of truth.
Okay.
Because your credit management data set might have been done once in a year and it will tell you this is a good to give credit to kind of a customer, and this is the same customer refusing your payment consistently. So it doesn't match. Then your billing and your order data doesn't match. Your billing data with cash application doesn't match because somebody has paid you 20 invoices together. How do you segregate between, okay, I received $10,000. There was $500 each invoice. I had 20 invoices. Now, how do I match it up? Which are the 20 I have received? I had multiple open. So this is a real-time challenge. Okay. Many people try to address it through orchestration, like build some workflows, build some automations, build some orchestration. An alternative approach, like you have touched upon it already with FinFloh, you are doing predictions.
Correct.
That is
Yes.
also one way of looking at it. Not sure how many companies are able to understand and are willing to look at it. They will need to, and somewhere down the line, you are moving towards an area where with the help of AI, you can make the entire order to cash predictive and you can have dynamic contracts as well.
Absolutely.
Okay.
Yes.
So I will choose to refuse to supply to you if you're not a good payer. That can be a business vision one day, but there is a long way, phenomenal change management, governance, compliance, legality, multiple 20 different things to walk through that path before that train arrives.
But this brings me to a thought that right now, what I feel is a lot of companies, although they are ready to invest in technologies like collections, right? Because they are able to get ROI from it instantly, right? But they would probably not be willing to invest in a solution which helps them with credit control, because they think that this is something which is far-fetched and probably the ROI of me actually getting something out of the solution is less. Whereas I think that if they're able to fix the credit control process upfront, right, their collections automatically gets fixed. Right?
They will have lesser collections to collect. They will have lesser AR to collect if in case their credit control is streamlined.
Exactly. And they will have outstanding.
There is one complexity. So one complexity which has been, I think there was a London School of Economics professor who said that we have a problem of 20th century technology being sold as a 19th century methods and deployed like an 18th century product. So it's something similar on those lines. The problem lies there. Why? Because people believe credit management, I just need once in a year score that any Serala, Experian, DNB can give me.
Right.
It's not like that. If you did it, let's say if you did a credit assessment as per your parameters just 3 months ago, last night that same customer has filed Section 11 and you have $1 million in order you have to fulfill. What would you do?
I think these are the drawbacks of not doing a periodic review.
So if you recall what I said a few minutes ago was around a single version of truth. This is the single version of truth I'm talking about.
Right.
That anytime, anywhere, access to truth.
Correct.
Okay, which is very important because you are taking a lot of decisions across, right from whether to grant credit or extend the credit terms for a particular customer, to how do you do the performance obligation capture, to whether to approve a dispute that has been raised, or which particular invoice to apply the cash on. There are a lot of decision points involved. Very simple. I am a collector. Which is the first customer I need to call?
Correct. Yeah. That's a straightforward application of AI.
Yeah. Do I pick a customer who's hardly $100 but has been waiting for 120 days, has not paid me, or do I pick up a customer with just 30 days overdue but it's $50,000 customer? How do I prioritize? What will give benefit to my business better? There is a need to align technology and business objectives, and that is something where you see a lot of the gaps happening. People are not making the most of even the tech that they have adopted. I have seen scenarios. People spend 18, 20 months into a technology implementation, spend around 1.5 million direct costs and another maybe 500K indirect cost of their people spending the effort in order to ensure that implementation goes nice and fine, only to not use that tool when the closing is going on. So,
but that must be putting all these companies under a lot of pressure to make a switch, right, and figure out another solution, right? How do they actually go about it?
Pressure is of cash flow. Pressure is DSO. Pressure is working capital. Pre-COVID, working capital was available 2 to 3% at interest rate. The cost of capital was very low. Today, it is 8 to 9. If you are a good payer, if you are a bad payer, it can go up to 27, 28 as well.
Correct.
Okay, so cost of capital has changed in last 4 years. The dynamics have dramatically changed. There used to be these capabilities or technology capabilities like building and integration and all that. They used to be considered as a superpower. Today, ChatGPT can give you the exact syntax you need to use in order to integrate one thing to another. Terraform can automate that for you. So you are super easy. So your core table stakes have changed. Okay, I'm a big fan on the business side of these VP credit, CFOs, GBS, shared services, who are making a conscious effort like a 20-25 minutes a day as well of learning about the latest technology trends and how their business can use it. And equally, I'm a big fan of those CEOs of startups who are investing time and effort in order to learn the business side of the things, despite being a technical guy primarily. Because that is the model of the future that will give you the best product. Gone are the days for CEOs who can talk a lot of blah, 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 do not understand what is happening inside of their product. Right? The CEO should be able to see and help the team that maybe instead of a logistic regression, you should try a random forest or decision tree or a XG booster. The guy should know what is happening and behind the curtains. Gone are the days where you cannot know it and you can still survive. That model is gone. Courtesy AI. It has made things industrialized. It has made things accessible.
Correct. Okay, so now we'll move on and talk about a few applications that are really close to me because we are working on those problem statements, right?
Sure.
One is people have been talking about AI-driven collections from probably 5 to 6 years before, right? But can you touch upon, so this is point one, could you touch upon how exactly AI is being used for collection purposes? Second is another thing, like when you talk about all these big box retailers, all these companies which face a lot of disputes, right? Then disputes identification becomes another big issue, right? They spend like months and months of time just to figure out and sort their outstanding disputes to see if they're valid or invalid, right? That's the second point. And then the third point is about making the right credit decisions, right? Right at FinFloh, what we do is we combine both market intelligence with the likes of data providers like Experian, DNB, right? And also we take into account the existing receivables data or that customers' response and behavioral data on how they have gone ahead and made their payments, if there has been a delay from one end, right? And we combine both these methodologies and then come up with a credit score. And there's an AI layer on top of it. Okay. So could you just touch upon these three concepts and just share your point of view?
So collections, I'll just touch up one. If you do a search on AI or AI agents, okay, which is working on a kind of a canned area, knowledge graphs, retrieve augment generation, very specific focused area, completely autonomous, that is possible. So collections will be moving into an agentic AI way into the future with a triage to obviously a human in the loop, that if in case somebody is completely paranoid, emotionally charged, okay, transfer it to human. That is already happening. That is already happening to some extent. But collections will cease to be an activity which will worry people more. Another dimension to collection is why collect when you can predict?
Right.
So there are products in the market which basically help you do that. Why collect when you can predict? Now I will answer this and third one together.
Okay.
Once you are talking about these retail disputes, you can predict them.
That's true.
Okay, because the data, you already have the data. It is going to be the same reason. The business cycle is the same. I would say material number, item number, customer number, PO number. There will be a lot of commonalities.
Right.
Right now, the algorithmic power allows you to perform this multivariate analysis at a scale. You were not able to do that till now because the resources were not matured. It was not there. But now you can do it. Why don't you do it? Okay, so it's a matter of somebody coming up, and some of the companies, one ERP is already actually working on this plan. They are building up these control towers both for AR and that what they will do. This is basically agentic AI, predictive AI, everything mixed up together. So in a few days, you will hear it. They already have done some work on supply chain. They want to do a limited release in 2025, then a public release in 2026, some sort of plan they have. But it's a very big ERP company with very big aspirations, very disruptive. But the moment they do it, the ERP will cease to be ERP. It will become predictive resource planning.
Okay.
Try to see
they change the narrative altogether.
Exactly. Right? And you can do that. Actually, you can do that. So your entire around how to leverage AI into these areas have to be based on what is possible, not what has been attempted.
Correct.
You have to redefine what is possible. Okay. And what was the third one that you asked?
I think one was collections, one was credit, and third was the disputes identification.
Credit, obviously. I mean, you just see 5 years down the line, how would your decision intelligence and credit scoring system will be. View it, if you evolve it properly, you might not need an Experian, you might not need a Serala. That business model will become outdated.
Because they're just data providers, right? They don't provide any intelligence.
It's a static database.
Correct. Yes.
Who has paid? Okay, make an entry. And see, one additional aspect you must understand, especially when you're talking about AI across these areas, we were dealing with a lot of monolithic systems. So when I say monolithic systems, which is supposed to be set up on premise, it's software, but you need a server room, you need a dedicated, it is not connected to anything anywhere in the world. Now it is just like your ERP is existing into your laptop, which might be half an inch thin. Try to see it like this with a lot of features, like the dimensions, if the data, and I have just written a very interesting article on this, the curse of dimensionality on LinkedIn. Okay. People who have access to my LinkedIn profile, they can go ahead and see this article, which is talking about, so if you have 300 data dimensions and you have 5 such data sources, it is going to consume a lot of algorithmic power, a lot of processing power, a lot of hardware, a lot of storage in order to make predictions on that. See, if you just spoke just about ChatGPT, if I tell it a lot of things, it will give me some kind of crazy response, right? With AI, I have to do feature engineering. So we capture a very sophisticated database, which allows you to have 3,000 columns of data. I'm not talking about rows. I'm talking about columns. So if you have, let's say, 3,000 columns, how many permutations and combinations you will have to calculate in order to make a prediction with a reasonable amount of accuracy.
Correct.
You're still not into the quantum era. You're still in AI era.
Yeah.
So try to understand it. And then you are talking about millions of transactions. Then this data has rows as well. Now, this was the challenge SAP actually did the S4HANA. What is in-memory computing solving it for? So instead of refreshing the entire database, you are just refreshing a cell. That's what in-memory computing was. So in an environment like this, simplification of your data set, simplification of your core of your process is a key differentiator.
Okay.
So if you are one of the products which is replicating what was existing in a data set,
right,
and then doing a like for like, and then trying to use it into your platform to do it, going forward, the way prediction demands, just like we say, compute demands increased, database demands or data demands increased. Now AI demands are increasing.
Yeah.
You will hit a wall.
Yeah.
So I'm not sure how much I have been able to make it simple, but what I'm talking about is reduce the width, make it simple, maybe define new attributes,
okay,
and then use AI.
Got it.
Because the metric that you are after, or that is the key important input for you, it might not be there into the existing data set.
Yeah.
You have to derive it.
It might be a combination or some sort of formula that has to be implemented to get to that.
You might have to define and derive. This is what in AI world we call as feature engineering.
Got it. It's very exciting.
It's very exciting area. This is what will determine. So the 3 use cases that you spoke about,
right,
collections, dispute and deductions, credit management. Yes. Try to see it like that. Get to it into the current state.
Right.
Even the ERP company that I spoke about, there is a lot of YouTube videos, so it's a public information around how their executive is talking about what they want to do and all that. Their CEO is talking about it. Even they are doing it. So they cannot do it basis their existing database. So they have defined a new layer of intelligence,
okay,
from which AI will pick up stuff and give these predictions. So from a very tactical standpoint, this is the way forward. This is where AI is headed.
Yeah. I think just to add on that and just to simplify, right, what I understand is, let's take the example of credit here, right? We already have these data providers who can give you all the information that you need, right? If you go ahead and create a platform which again shows the same data set that
you're not helping,
that's not going to help, right? You actually need a layer which
a lot of products in order to cash are running on that logic.
Exactly. I think it's more important to take that data set and derive insights from that. Yes. That can help decisioning, right?
Make it simple for the AI. Because see, the less features you have, more accuracy your predictions will have.
Right.
Okay. Yes. Machine learning basically is there to address any form of inertia. Machine learning core job is prediction. I calculate something, I give you something out. That's the core premise. If you have less columns, its accuracy goes up.
Right. Yeah.
If you give, let's say, 1,000 word prompt to a chat GPT, it unfortunately cannot answer
those columns, right? If you're able to identify probably that top 10% of columns that would give you the right results, I think that does.
Maybe there are lurking variables that you need to determine and make a new variable.
I got it. Okay, so we'll move on, and now probably I would love to hear from you if you have encountered any real life example or success story where you feel AI has really improved a company's overall invoice to cash process or finance process in general.
So currently there have been some instances like finance and accounting. It has happened to some extent. Let's say I'll give a very classic example, and this is something that we witnessed ourselves. So there was a very large multi-billion-dollar conglomerate, a technology conglomerate indeed. Okay. They had a lot of travel and expense reports. Okay. So they put an AI for audit.
Okay.
So it was identifying which are the reports to audit and which not, because usually it's a very standard and a very basic logic to say, okay, we'll pick up 5%. And we will just extrapolate that this is the audit accuracy or everything is okay or not. So they built an AI which says which are the right candidates to qualify based on different parameters.
Interesting. Yeah.
And they originally anticipated, okay, this was a technology services company, managed services. We'll give you 30% productivity. The productivity was 75% once they implemented, because there is no need. It has eliminated false positives.
Correct.
So I picked up something and I did not find anything. That's a wasted resource. Another AI example, which I created, this was hugely beneficial because this was a business email compromise scenario-based fraud prevention product. It used a precursor of the current day ChatGPT. The model was called Google BERT. Okay. It was a natural language processing model. Okay. It used to screen the emails which are arriving for payment information change or contact information change and give a risk score, which one is a fraud and which one is not.
Nice concept.
And this is a very, very legitimate problem. Because once it has been a while since I made it, so I remember those numbers. Like just for UK market alone, the annual losses by means of this kind of a payment fraud that used to happen. Like you are working in a company, I send an email on your behalf. Subhasis is not well today. I'm his friend. Can you please change this bank information? Some sort of that kind of social engineering law. Just for UK as a market alone, this was 160 billion pounds every year. So it was such a big problem. And this is something which any managed services company CEO, this is something that keeps them awake. Because you have one instance. The entire commercials of that contract are gone.
People looked, right? If not checked at the right time, that could cost like millions and billions of dollars.
So we created a 97% efficacy AI, which basically the 3% was not actually fraudulent transactions which it failed to detect. The 3% were the genuine transactions it classified as fraud.
Got it.
And 97% of the time it classified accurately. There were specific products which are able to detect whether somebody is using a tiered. So you might be sitting in Bangalore and you say, I am from Texas. So it is not going to work.
Yeah.
It will identify.
With this technology, right, I just had a thought that this same technology could actually be replicated in the order to cash scenario as well. How it could be is, for example, when you are receiving remittance information over an email, right, from a particular customer. Now, a particular customer could be sending around maybe 10 emails or 15 emails in a month. For a person to identify which of these emails has a remittance information included, right? I think a similar technology or a concept can be used. Yeah,
you can do that.
Correct. And that can reduce a lot of the manual effort that goes into clicking every email and seeing where will I get the information.
See, despite all the auto cache and all that people talk about, you and I know cache applications still very manual. Try to see from an industry standpoint. I'm not sure if you are working with those industries currently, but try to see it from the industry standpoint. Do you believe that airlines can use it? They have a massive use case. Every time any passenger's baggage is over limit, they have to pay cash. Reconciling that cash is a pain in airlines' neck.
Correct. And who do they reconcile it to? Like, how is that accounted?
So which particular PNR number this cash received has to be matched with. Every time you do it, even in US, I've seen the way it happens is there is a kind of a different counter they send. The moment you are speaking to a different person, that information leakage has already happened.
Got it.
So if these are the kind of things that basically companies need to look at as to, okay, am I a one-trick pony or I can do multiple tricks?
Yeah. Got it. Okay. So Mohit, I think so far we have talked a lot about how can AI be used in the invoice to cash process, how it can revolutionize the entire finance domain, right? But I think you had touched upon this point earlier where you mentioned a term called change management. Even today, there's a lot of resistance within even large organizations, especially if the departments are following the traditional mindset, right? And there's often a fear that AI is going to replace human jobs in a process like invoice to cash, where there are a lot of repetitive manual effort, right? What's your thoughts on this? Like, how do you think these two processes can...
See, it will change jobs.
Correct.
It will not replace jobs.
Okay. Could you elaborate?
Try to see AI as a new chapter in your syllabus.
Okay.
That's coming to your exam.
Okay.
Do not see AI versus humans. See humans with AI versus humans without AI. This is the battle.
That's a great point. Yeah.
Okay. That's number one. Number two is, if not AI, then what? Something or another will take over the job.
Right.
It has happened. It happened once mechanical farming was introduced. It happened once industry moved from manual mills to, say, mechanized mills. Machines made entry into the factories. It happened when people stopped moving from horses to cars. It happens once instead of calligraphics, you started printing.
Right.
So you are trying to avoid change, and change is the very constant you have. Okay. So do not see it like this. So let's say the process efficiency of a process which has got AI and the process efficiency of a process which hasn't got AI, there will be huge commercial construct differences.
Correct. Yes.
And it will become extremely difficult for the process without AI to survive. So it's not about you not adopting it. It's about your competition who has adopted it. Their commercial numbers, their productivity, their customer experience, their accuracy, their business value has taken a shot. And every time it will go high, it will be at your cost.
Correct.
Because the market can only expand at a certain rate. Every time somebody else gets a customer, your opportunity to get the same customer is gone. So
I think for you to be best in class, AI is what you have to go for, right?
I don't care about AI, no AI, boss.
Okay.
What does it take in order for you to meet your business objectives? Are you committed to your objectives? Forget AI. If it is not AI, it will be something else.
Okay.
Can you match up the speed and efficiency of AI? You cannot. Can you put additional people? So we've talked about predictions. So try to see it like this. Was it not possible manually to do this decision intelligence and credit risk scoring that your platform does before you introduce the platform?
Yes,
it was possible to do it manually. Correct. But how many people, effort, and time it would have taken?
Correct.
So the question here is, whatever you are asking AI to do, obviously you can find the right resources and do it manually. Hire PhDs and statistics for that matter
Right.
to do it for you. But does it allow you to sell your product at $10 a unit?
Got it.
So you need to have a kind of a architecture lens to your business.
Yeah, it's about speed and value, right?
Speed and value, very important. It's not about fad.
Correct.
It's not about using AI 20 times. I see a lot of people get excited. They get into a kind of a stage and talking about, I am an executive talking about AI. Okay, great. Do you understand what you're saying?
Okay. So yeah, Mohit, so far it has been a very insightful conversation and we're almost at the end of this podcast. But before we part ways, right, I would just ask the forward-looking question. What advancements in AI do you think will have the most significant impact? Let's focus on the invoice-to-cash process. And let's take a time span of around 10 years from now.
Collectors, cash application, disputes, collections and disputes as a process might not exist.
Okay.
Completely gone.
Understood.
People who are selling collections platform and dispute and deduction workflows, they will be. They'll not have anything to do.
Platform that does all of this, right?
You might have single integrated solutions which is taking care of every single exception, and these will be quantum and AI together. So obviously there will be some innovations which will sort out how do you put 20 companies' data onto the single instance and still keep it separate.
Got it.
Okay, there will be innovations on that front. Cash applications, it will get faster, it will get better. Credit management will be where majority of the analysis will happen then. Whether to engage in a transaction or not engage in a transaction. Because you can hold yourself back at that stage.
Okay. So Mohit, that was amazing talking to you as always. So everyone listening to this, that kind of wraps up the session for today and it brings us to the end of this insightful conversation. And to Mohit, thank you so much for sharing your valuable expertise. I'm sure our listeners will find this discussion extremely enriching, and especially for people who work in the finance domain, this is going to be a great session to listen to. And for everyone, I would just say stay tuned in to our podcast as we continue to explore the many facets of AI in finance. Just wishing you all a fantastic day ahead.
Thank you so much, everyone. Really pleasure to be here. Thank you, Subhasis.
Thank you, Mohit.